Okay, good afternoon, everybody. Welcome to Paul's Monday Market Update 156 for Monday, 30th of September 2024. I hope you've had a good weekend. I hope you're ready for a rather interesting and eventful week ahead. For those of you joining us for the live session, it'd be great if someone can just confirm that you can hear my voice, you can see the slides, that the technology is working in our favour rather than against us. And whilst you do that, the Monday market update is literally just that. Okay, it's the next 25-30 minutes of me flying through as much as I can possibly cram in the time in order to give you a little bit of insight into what I'm looking at and interested in the market. We'll look at strength and weakness within FX markets, some charts of interest, and then look at the live markets themselves. It is not a signal service. It is not a trade recommendations. It is just purely what I see, which may be of help or assistance to yourselves. Fabulous. Thank you, guys. Thank you very much. All right. As always, you're very welcome here, but just remember, you're always responsible for your own trading decisions. And if you want a bit more education, every Monday at 2 o'clock, I do a webinar for active trades. Okay, Monday Market Matters. You can join it, either find it on the active trades on the website, or there's a QR code there you can take a shot of if you want to join. Today, what I'll be talking about is the education element, is trading a long or a short squeeze, which might be quite relevant to what we're seeing happening at the moment in markets. But as I said, you're very welcome to join us for that if you so wish. All right, let's crack into the main thing. So, as I say, I always start with looking at the STAM. This is the model that my own model that I work on every weekend, just to the idea to give me an idea of where is the strength and where is the weakness, primarily within FX markets, and then all the others. Because once I have that, well, then I'm in a better place to allocate my time, energy, and resources for the week ahead. So, what is it telling us? What's the story? I appreciate if you're new to trading or new to joining, it might maybe look a little bit intimidating or overwhelming. It's not really. It's we get the hang of it pretty quickly. Where are we? What are we doing? Here we are. We're in week 40 of the year, right? Week 40, 30th of September. Remember, today you've got end of month and also end of quarter. So there will be flows that will move markets and shift markets around. And as we look at the live markets later, you'll see that. But also just recognizing that that might distort price action today, but also it's people positioning for what I suspect A is going to be an interesting week, and B, reaction to some of the news that we've seen over the last few days, which I'll talk about more as we go through. Where's the strength? Where's the weakness? Have there been any changes? Well, what we have seen is Japanese yen has nudged its way back to the top of the pile for various reasons, and we're going to look at that more when we look at the charts of interest. Maybe we'll have a little chat more about that. Okay, and certainly when we look at the live markets, I'll show you a quick insight into that. But yeah, Japanese yen, which had been knocked off its perch, had basically moved its way back into the top floor there. That has basically bumped sterling off the top of the pile. Nevertheless, we're still seeing sterling strength, and this is a great lesson for new traders that I've said all summer that sterling strength has been more down to the weakness of others, more so than any real love of UK and UK markets and economy. But ultimately, you have to always trade what you see, not what you think. Okay, you can think what you want, but you have to trade what you see in front of you. And sterling remains strong. All right, for whatever reasons, you can find that to suffer, but it remains strong. And you can see even today, okay, on today's session, okay, we've seen sterling strength come in there. What we've seen in terms of the other end of the pile, Canadian dollar still is bottom of the pile, and US dollar is, and we'll look at that. US dollar is kind of sat on the 100 on the dollar index. We'll look at that more. And as I said, sterling strength and strength of others has been effectively more due to dollar weakness than anything else. What we have seen is Swiss franc, okay, is continued to sort of roll off the top from being in that kind of the highs that it was. Euro is just euro. Okay, there's no real massive love for that there. Okay, and it's fascinating to see that the Germans come out and they've really done away with any kind of positive economic forecast for the rest of the year. They've kind of thrown in the towel on basically on kind of any kind of a growth within the German economy. And as we will look at in a moment, that clearly the DAX didn't get that message, as we will look at when we switch the charts in a moment. What we have seen is, Aussie strength, okay, and Kiwi strength there, and reasons for that being, well, certainly, they are not cutting interest rates in the same way that the Americans, the Europeans, ourselves have started, and also they are basically, I think, they're also holding up with the kind of the China frenzy that we have seen happening in the last few days, and we'll talk about that more in a few moments. So. Yeah, yen and sterling still top of the pile. Dollar and Canadian dollar still bottom of the pile, and there's nothing happening to particularly change that. What is interesting is when I look at this week for my own model, the model is getting very busy with lots of different trading environments for me. Okay, having been a bit thin, okay, during the summer, it's now starting to do that, and that's a kind of a that in itself is an early warning. Okay, that let's say the plates are shifting, and of course with all of this. We are about 5 weeks to go till the American election, and invariably there's going to be some jockeying and positioning as people sort of try and get themselves ahead of the curve there, or position themselves accordingly. That position might be that they just sit on their hands, okay, and wait to see what the hell goes on there. Certainly, when we look at the indexes. In my model, they are pretty much all right. As I said, they're all pretty much strategic buys. They're all STAM on Bravos. They're all strategic buys, okay. And the price action, okay, has for the most part, still continues to support that Nikkei there, okay. Is that we'll look at that, as I said, in a moment when we have a little bit of a look at China and Japan. Oil, okay, is still a strategic short. Not really a shock there. Gold and silver, they're still strategic buys as well. Interestingly, the VIX. The number is, it's south of 20, so it's still not, real volatility. But in terms of the actual, for my model, it's kind of interestingly bearish on the way that comes together. Bitcoin remains a strategic buy as well. So if you were to look at that, you might say, well, Paul, look at that. All the indexes, everything, all the indexes are happy. Gold is happy. Bitcoin's happy. Shouldn't we be happy? And as I said earlier, you have to trade what you see, not what you think. And certainly there have been some interesting, great trends and stuff in some of these instruments. But as always, being a bit of a cynical old sod, you have to sort of temper that with what we are going through and what we're about to sort of go through in terms of the this final quarter of the year. Okay, so let's have a little look at some charts of interest. These are just charts that are on my watch list at the moment. Okay, they are something that you might just be useful to you to add to your watch list, or help you just build situational awareness, build a big picture about what's going on in the world. This is this is the China A50. Okay, so that in itself is a how can I put it? It's almost like it's synthetic's not the right word, but what it is it's a reflection of the part of the Chinese stock market that Westerners are allowed to operate in, and it's not a bad reflection of the overall market. A lot of people would look at things like what they call the CSI 300, which is the Chinese stock in market, etc. But the picture is the picture, but what we might want to be looking at is here's what's gone on in the last week or so. Okay, and this is the monthly chart. Okay, and by what we were down is down here at 11,000, and now we're kind of tracking up, tickling the soft underbelly of 14,000. That is quite some considerable move. Now, I'm interested in this because what we've seen is. I don't really trade China. Okay, I don't really trade it. I don't invest it, but mainly because I just don't understand it and I don't know enough about it. Okay, but I keep an eye on it because of its stature in the world and what the way the world is going. But last week what we have seen is that I think the Chinese cut interest rate not once but twice. They announced they were going to have a $142 billion capital injection into, I think, 6 banks, and they are actually actively trying to support their capital markets, their financial markets. And what has fascinated me being the cynical old sod, is that seeing governments having to basically support their markets is normally for me a bit of a telltale sign that something is afoot and there's something's wrong, and actually I should be very wary. However, the world seems to have interpreted it differently, in that it is just basically an opportunity to buy China, okay? Just buy China. And hence why we have seen over the last week or so this absolutely, rocketing in the overall Chinese stock market. There was a fascinating interview. I think I put a piece up on my Twitter feed, FX Trade Paul, a guy called Dave Tapper, who's a big fund manager, literally just came on the TV and said he was literally buying everything in China, which, as I said, it seemed a very interesting taking it. But, as I said, you trade what you see, and what you see there is just a huge move there in China, a huge move there. Okay. They are doing, some might say it's like the Draghi, Mario Draghi comment when, 10 years or so ago, he said, they will just do whatever it takes to support the euro, to keep it alive. And it looks like the Chinese are doing that. Okay. And hence why the kind of people buying that's why we see reflections of that in things like the Aussie dollar, Aussie, effectively being a proxy for China in terms of how people want to engage with that. But once you've got that going on, you've got other elements of it happening and stuff. So what some people do trade or have a bit more access to is the Hang Seng, okay, the Hong Kong index, and lots of Westerners will have had exposure to, let's say, Chinese markets through Hang Seng. Hang Seng, it dropped an awful lot after some of the democratic issues and riots they had there a few years back, and it's kind of flattered to deceive would be my name, but. This is the weekly chart of Hang Seng, and once again you can see for yourselves, okay, where we've shot to in the last week from where we are there, what's around about 17,000 up to 21,000, and we've run into the weekly 200 period moving average, and we'll have to see whether it respects that, or whether it just continues on because people have got into this kind of buy China sort of issue. Once again, the old cynical sodomy, it might be saying that everybody's pumping it so that they can sell out of it at higher prices. But as I said, that just might be me being a cynical sod. We will wait and see. But the thing is, this kind of thing, it has an impact. People see it. It has knock-on impacts. It ripples throughout the world. And of course, everybody's interested in it. If you look at the financial media, it's across the boards there in terms of people's interest with it. And so as I said, I don't actually trade these, but I certainly keep an eye on them just because of the nature and the impact they have on instruments that I do trade and I do take a look at. So across the sea from China, we have Japan, and we talked about it last week about Japanese yen, right? What's been going on for the last couple of months, but what has kind of also been interesting is that I think it was kind of Friday into the weekend. What we had was the LDP, who are the kind of ruling party. They have voted to replace a prime minister or their leader with a new chap called, I think his name's Shiba. If I pronounced that incorrectly, I apologise. That's my fault. He's the ex-defense minister of Japan, and he, interestingly, his comments have been about how he wants to bring nuclear. He wants to build basically an Asian NATO and bring nuclear weapons into the Pacific, which, because of course what the world needs right at this moment is more nuclear weapons around the world. All right. Anyway. So not only is he, being voted in as the head of the Japanese party, but he is now calling for Japanese elections on October 27th, which is not long away. I think it's a Sunday. They do theirs on a Sunday, etc. And interestingly, that would be about a week or so before the American elections. And once again, if you're a cynical old sod, you'd be wondering what, if any, connection there might be in terms of how they've called that just in front of the American elections. I've long sort of, sort of grandstanded about the sort of what has been going on with Japan over the last year in terms of the Japanese yen, and it's a reflection on the US dollar and also the kind of the Chinese and Japanese positions in US treasuries, etc. I've always sort of thought that maybe the Americans are throwing the Japanese under the bus in an effort to maintain dollar supremacy, but once again, as I said, that could be me just being a cynical old sod. But anyway, what we're interested in is really how does it show up in markets, and can we turn it into an opportunity? What you've already started to see is Nikkei, okay, and 225. All right, you will find it across whichever broker you work with. You'll find a version of it. We've seen drops in that. Okay, some of those comments, some of his, Shiba is as I said, he's quite a hawk. I would name him as and stuff. And both the Americans and the Chinese will be very, very interested in terms of what goes on there. Okay, and whether he gets into power and whether, as I said, he starts building an Asian version of NATO. And looking at allowing Japan to have nuclear weapons. That's a major change, right? That'll be a huge sea change in sentiment in Asia and the Pacific. Okay, and of course there will be knock-on impacts for that. And to finish off before we look at the live charts, this is Nomura, a Japanese bank. A Japanese bank. Okay, this is their New York Stock Exchange listing, NMR. This is the weekly chart. I'm interested in this because, I talked about how at the end of July, and we had a start of August when we had shenanigans with the Japanese, okay, with the raising of interest rates, and they're talking about, their pathway for that, basically how that effectively, caused, a huge turnaround in the yen, huge rip in the yen. I said that that wasn't the kind of main event. It's almost like an hors d'oeuvre before the main event. And I thought something happens like that. It breaks somebody. There's always some big boy who's on the wrong side of a move like that. And with that move in the yen and these moves in China, there are going to be big boys on the wrong side of that. And the question will be, how badly, wrong side are they? What we've seen over the last over the weekend is Nomura have basically been removed. They've been caught. Being naughty boys, okay, and they have been removed from basically being allowed to sort of be involved in Japanese yen bond auctions. That's never a good thing. That's never a good look. Okay, even if it's just a mere sort of technical element, it is a sign of threads being pulled. All right, and that's the way I look at it. As I said, once again, that might just be me being a cynical old sod, but it is a thread being pulled, and so I would be watching the Nomura share price there. Okay, you can see the weekly chart there. It's been sat on the 50. It's been sat on the red 50 period moving average there with some pin bars there, but I suspect we will see that might change. So you might just want to add that to your watch list just to see how that plays out over the next few sessions. So there's an awful lot there going on in Asia, all right, okay? And there's a lot to keep us awake in what is going to be an interesting week anyway, all right? Because, of course, we've got plenty of news coming out this week. And then, of course, at the end of the week, we've got non-farm payrolls, which I think might be the last payrolls before the election. I'm just trying to do the mental arithmetic in my head. Either way, everyone's going to be looking for those numbers on the non-farm payrolls on Friday. Once again, this really is a day for cynical old Paul to come out. It would not surprise me if those numbers were pumped to basically give the incumbent administration a bit of a bump before the elections. But the world and his wife will be watching to see those job numbers, to see how they play out. All right, let's switch across to the live market. So just bear with me a moment. We'll switch across for a second, and then we'll look at the live markets and see what score is going on there. Okay, so bang, here we are. I'm hoping you can still hear me. Hoping you can see the charts now. This is just a profile I have of the big major indexes. Okay, so basically Dow, Nasdaq, SP 500, Russell, FTSE, Nikkei, DAX, okay, and the oil. As I said, oil is still a strategic short. You can see that there, okay. It's in a downtrend. Yes, there has been some support there, kind of around about 68. But let's see how that particularly plays out. Okay, we'll keep an eye on that. And what I'm probably more interested in at this precise moment is right, what's going on with those US indices. Once again, Dow. And on a weekly close, it closed at new highs. Okay, that has been an uptrend all year. At times it's been scruffy, and at times it's been scrappy, but it remains in an uptrend. Yes, there is a bit of a rejection candle pin bar, but it's still closed at highs. Okay, you hear me saying this. Okay, new traders, when there is a trend, don't try and fight it. All right, don't try and fight it. Don't let your ego get the better of you and think that you can call the top, because that is a bit of a mug's game for a new trader. That is still an uptrend. Yes, there is a little bit of a rejection candle there, but I don't see any reason to fight that, particularly today. S&P is the same, okay. S&P still, that's a beautiful uptrend. It is still, it still had, a weekly high close. Yep, there is a few wicks to the top, but one swallow doesn't make a summer. One wick doesn't make the end of a trend. All right, it's a case of watching how that plays out. It would not surprise me if we kind of just had a little bit of muted volatility for the next 5 weeks as we run towards the election. Okay, a lot of big boys, it's going to be too close to call. Nobody really knows what's going on, and so people are going to be just positioning themselves. They're just going to basically hedging their risk as we run into what's going on. And perhaps the Russell is maybe more of an indication of that. The Russell there, that has been swinging left, right, and centre, okay, for the last 6 months, all right. And yes, last week, sorry, was an inside bar, pin bar, but you could call that, yes, it is above its averages. Yes, it's grinding north, but in terms of it being tradable, that is perhaps more a reflection of the kind of indecision that is going to go on with people for the next 5 weeks running into that US election. What we've seen, NASDAQ has been an uptrend. It has not followed through like Dow and S&P to new highs, but it has broken a counter trend line. It does, grind its way up there. There's a little bit, once again, a bit like the other two, rejection candle there. But, a lot of that will be based upon what we see with some of those AI stocks this week, okay, NVIDIA and the likes and stuff, and seeing how they particularly play out. Nikkei, we've already looked at. DAX, okay, bang, look at that. This is another reminder that you can have all your analysis, you can have all your opinions, all you want, but really ultimately you have to trade what you see. We just said earlier that the German government, they've come out and basically said they're just basically ditching their economic forecast for the rest of the year. I mean, that just is, that's just not good. All right, that is just that, as I said, that is a sign that they're just thrown in the towel, okay, and realize that they're screwed. But as I said, the DAX didn't get the message because last week it once again it barreled its way to new highs, and this is probably more a reflection that, as I say, you have to trade what you see, not what you think, and also a reflection of the global world we live in now. Whereas actually, lots of the algos are just tracking the indexes, and for the most part, just track each other. Okay, and so we see that pumping its way there on even the daily chart. Okay, through September, it has pumped its way to new highs. All right, and as I said, I might not understand it. I might not, agree with it in terms of looking at it, but stock market is not the economy. You trade what you see, not what you think. Close to home, look at the FTSE, on the weekly chart here. Well, you've heard me talk about this before. The Rachel Reeves has got doing her budget on the 30th. So we're going to have Japanese elections on the 27th, Rachel Reeves doing the budget on the 30th, and then US elections on the 5th. That is going to be a rather eventful couple of weeks, I think, for people there, okay? And I think we already see it here in the UK. Look at how the price action is coiling up, it's tightening up, because nobody's going to make big decisions until they hear what Rachel Reeves has got to say. The big distraction might be, Starmer's family life, or or his enlarged family might well be more of a distraction this week, right? As that all comes to the fore. But really, as I say, nobody's making big decisions about the UK, the FTSE, until they've heard what Rachel Reeves got to say. Okay, and then they'll have to put that into relevance regarding what's going on in the US, what's going on in China, America, etc. So I think it's just going to be. I think the FTSE remains dull for the next month or so. Quickly look at gold. Bang. All right, gold weekly chart. Still an uptrend. Okay, still an uptrend. Okay, daily chart. All right, it might have taken a little bit off at the end, but as I said, we're into end of month, end of quarter. If you're a fund manager, do you know what I mean? And you've been long. All right, well, you've got to bank your profits to get your bonus and stuff. So there will be an element of that. So no surprise to see the last day or two maybe a little bit coming off of there, but that trend is still is still long. All right. Silver is much more scruffy, much more scrappy. And last week, having done the hard work of breaking above from 28 to 30 and then holding at 30, last week was, as you can see yourselves, we had a nice bit of a run up on the daily chart, but a bit like gold, there's been a bit of a come off the top there, right, for various reasons, which we'll look at in a moment. Okay, and you have to reflect on that, where it is with regards to not only what's going on in the world, but also what's going on with the mighty dollar. So let's have a quick look across the dollar. We might overrun a couple of minutes. I'm just going to look at the dollar. We'll look at Japanese yen, and as always, we'll finish close to home with sterling. All right. So when I'm looking at the FX markets, I understand where the strength, the weakness. As I said, my model is because my model is showing that it's still definitely kind of dollar weakness. Dollar weakness there across the board is cracking one. Okay, whereas Kiwi dollar, Aussie dollar, Japanese yen, sterling, they're the kind of the top of the pile there at the moment. So the dollar. Always look at the dollar index. It's the big daddy. All right. So, I want to understand what the dollar's doing. If I can do, well, then that gives me an idea. Look at that. Dollar index, weekly chart, downtrend, sat on 100. All right. Sat on the big number of 100. Everybody's going to wait to see, will it bounce like last time, or are we going to clip its way through? Okay. And this is interesting because, 100 it's a psychological number and it's a real number, and breaking beneath 100, of course, that makes dollar weak against the other currencies. But then you start to sort of to see what impact does that have upon inflation. Okay, the Mr. Powell, last month, the Jackson Hole pretty much said that not as many words that they've kind of beaten inflation, and the PCE data on Friday that came out kind of reflected that. Now his emphasis is on job numbers, but dollar becoming immensely weak, sub 100, that has an impact on inflation. So I will be waiting to see how that plays out. If I look at the daily chart and the dollar index, you've heard me talk about it. I thought we might have a we might have a double bottom forming, which then looked like a triple bottom forming, but we had to break this neckline here, break out of this consolidation period, and we didn't. And if you can see that there, the way I look at the dollar index at the moment is that we've got 100 beneath, and if you look at the 20-period moving average there, it can't close above there. Dollar index for effectively the last couple of weeks has been pinned between the 20-period moving average and the big round number of 100. And so, is it going to stay like that until later this week when we get NFP data that will just give us the catalyst for the shove, or will something occur in the meantime? As I said, you're just going to look at that. Look at that. It's just coiled. It's coiling up there, getting ready to make its move. Most people will be expecting it to break 100, all right? But, just because most people expect it to do one thing, it doesn't have to. It could well do the opposite. So you just watch it, you do analysis and watch and wait and see how that particularly plays out. On the reverse of that, we see how that's impacting. So Kiwi dollar, okay? Gosh, I think we might have even looked at this. Like Kiwi dollar, weekly chart, it continues, right? Kiwi strength, dollar weakness, that's what we're seeing there, okay? And the daily chart is just reflecting that. Aussie, okay. Aussie's doing the same, okay. Aussie's just rallying its way up there. Aussie strength, dollar weakness, okay. That's all I'm looking to try and do. Cable we'll look at in a moment. Dollar Swiss franc, okay, is still here. It's almost like a reflection of the dollar index chart, and that is a reflection that Swiss franc is weakening as well. From being super strong, Swiss franc is weakening because actually, it's dollar and Swiss franc fighting out to see who's the who's the strongest of the weakest pair. Looking at euro dollar, euro dollar's continuing. You can see it's continuing, all right. But as I said, I think the picture's not terribly pretty. And I think, as I said, this is more a reflection of dollar weakness than any particular euro strength. We've just talked about what's going on in Germany, etc. What's going on in France, okay, the numbers that we're starting to see coming out there. It is a reflection of dollar weakness more so than euro strength. And I'm not entirely convinced the Europeans are going to want this up trading at 112 either, because invariably that doesn't help European exports to the US. So we'll see what happens there. Okay, we'll see what happens over the next week or so. I think that'll. I'm just going to watch and shoot on that. Okay, so we can see dollar's weak. Let's finish with, as I said, Japanese yen and sterling. So this is my Japanese yen, profile. Here we go. Dollar yen. Look at Friday's candle. Euro yen. Look at Friday's candle. Aussie yen. Look at Friday's candle. CAD yen. All right. Friday's candle. Okay. Kiwi yen. You can see it there. Okay. Swiss yen. All right, and pound yen. All right, that is just the kind of the end of the week reflections of the Ishiba. Okay, getting the nominations, reflections of what's going on in China. Okay, and maybe people getting an idea of Nomura being a bit of a naughty boy and stuff, etc. And it being an insight into, let's say, underlying tensions in basically Japanese markets, etc. So you can see for yourself there are lots of bearish key reversals, engulfing candles. All right, just kind of the way that is playing out. That's that kind of little bit of yen strength, which is what bumped yen to the top of the pile. But we'll have to wait and see how that plays out if they start to go down the route of getting an election at the 27th, and if Ishiba looks like he's going to be the kind of the clear winner. All right, let's finish with sterling then, as always. Apologize, we're over on a couple of minutes. As I said, I'm always just trying to cram in as much as I can to you, so you've got a little bit of a look at what's going on. All right, let's start with the big boy, cable. Weekly chart of cable, that has just been, that's just an uptrend. That's a weekly uptrend. It pulled back to 130 a couple of weeks ago, as we said, and it's rocketed up there. Now, this is you trading what you see, not what you think, okay? And the dollar chart, the daily chart, August was just a fantastic run, and that was just dollar weakness. And then we pulled back into this, bullish flag, bouncing off 130, turning, resistance here, becoming support there, and we've rallied our way up there. Okay, we're up at 134. I think we hold about here for the next day or two because, end of month flows, end of quarter flows into NFP. But, that is dollar weakness, okay, and sterling strength. Look at the pound against the yen. Well, as we said, if you look at this kind of weekly chart, last week the week before last we had a really strong bullish candle for pound against yen. Last week we've had a really bearish candle, and not only that, it's the 20 bounced off the 20. It's sub 50. All right, it is just basically a reflection of that, as we've just looked at, a little bit of that yen strength, a bit of sterling weakness there. If we look at the other one, pound against Swiss franc, here on the weekly chart, we were around 111, which has been a level of significance. We've broken through it, and now I'm just kind of intrigued. This is squeezing. Look at the way that the weekly 20 is coming down, the weekly 50 is coming up, price is being contained between it. Okay, this is, after the SMB, they did their interest rate cut last week. The daily chart, to me, that's a rest before a surge. Okay, it's coiling up before it makes its next move. Quickly, right, pound against Aussie. Even though sterling is number 2, it's dropping against the Aussie. That's a reflection. It's dropped against Kiwi. It has maintained its highs, okay, against Canadian dollar. Look at that. That's actually kind of nice price action. Pound against Canadian dollar in terms of, it has just been in an uptrend. Pound is top of the pile. Canadian dollar bottom of the pile. Buy strength, sell weakness. That's my strategy. Last week we came down, we bounced off 180, and it's accelerated us up off there. Okay, which is what we said last week. Come down, test 180, and bounce off it. Okay, and that's the 4-hour chart. So that is strength v weakness. And finally, strength v weakness. Euro against sterling. All right, weekly chart. We are sub 84. Okay, we're down, tickling towards 83. All right, that's just been that reflection. Okay, all right, we've had a bit of a mincing around there, again, around about 83.40 for a few days, but that has still been a reflection of, euro weakness, sterling strength there. Okay, let's draw it to a close there, ladies and gentlemen. Sorry I overran a little bit, but there's a lot going on. There's it's an eventful week. There's stuff happening all over the world, and as always, I just want to try and cram in as much as I can, share with you as much as I possibly can with you. Just a reminder for those of you on the VTB, there is no stage 1 call tonight, but there will be a stage 2 call tomorrow lunchtime. And as I said, I'll be doing a presentation at 2:00 on trading squeeze if you want to join us for that. For the rest of you, listen, I hope you have a fantastic trading week. Okay, there's a lot going on, so keep your powder dry, manage risk accordingly. Have a super trading week, and I will look forward to speaking to you soon. Take care, everybody, and trade well. Cheers.